While consumers, entrepreneurs, and business owners are waiting for regulators and governments around the world to act, the largest stock exchanges in the world are gearing up their economic Fortnite to battle each other for the new top in this new industrial order. Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source for crypto news, interviews, and ICO reviews. Thank you for showing up. Tap that like button. It really supports us and it helps other people find this content. Also, if you have any questions or comments, leave those in the comments box below so that your voice can be heard as part of the community. In today's show, we're going to be talking about what is happening at the forefront of today's news with the largest exchanges in the world. We're getting news from smaller companies that more and more people are going to have more options to be able to purchase cryptocurrency, hold cryptocurrency at the consumer level, at the small business level. And at the same time, we see these startups and these new blockchain-based economic companies getting involved into blockchain, gearing up to become the new economic leaders of the blockchain-based future. We have the traditional stock exchanges of the world, which are recognizing the writing on the wall. They understand that Bitcoin and blockchain technology is going to revolutionize the way that consumers have trust and relationships with other consumers, with businesses, with machines, and any sort of combination thereof. And so with all that being said, let's dive right into the news and let's discuss. So first off, for anyone who's looking to buy or sell some of their Bitcoin for cash, say they have some fiat US capital, some cash, some pounds, or wherever the place is, there's so many places where Coinbase operates. You can go to coinbase.com. You can use our affiliate link, which is mintingcoins.com/buy. And then you can go to Coinbase and purchase Bitcoin, Ethereum, Litecoin, things of that nature. There's not a lot of options outside of Coinbase, even for people who don't live in New York State, which has overly restrictive rules for crypto-related businesses. But another option that has been on the horizon and which is seemingly released now in some parts of the country is Robinhood. And there's the Robinhood app, which apparently is available in Florida for users in Florida. And if we take a look at the screenshot here, we can see it says, "Congrats, you are ready to trade Bitcoin and Ethereum." And so apparently, this is now being released, probably tested into some markets where the restrictions aren't so great. And what this is doing is giving more people additional options, additional places where they can purchase and hold, Bitcoin and cryptocurrency as they put themselves on the road to learning more about it, to being able to accept Bitcoin and Ethereum and Litecoin for, digital payments for whatever goods and services that you provide. One of the best ways to build up your portfolio of Bitcoin and Litecoin is for you to offer your services or your products in Bitcoin and Litecoin, and then advertise the fact that you accept those payments. For the most people, for the average person, they just have maybe $10 a month or $100 a month or whatever that particular person has that they can afford to lose. They can put that into Bitcoin if they wanted to, and they could use the Robinhood app to make that happen. And so, if you want to take a peek at Robinhood and get more information, you can check them out on Crunchbase. Apparently, they are a stock brokerage that allows customers to buy and sell U.S. listed stocks and ETFs with zero commissions. And they have since expanded to, not just U.S. listed stocks and ETFs, but also Bitcoin and Ethereum. It'll be really interesting to see how that progresses and exposes more people and opens up more people to this, so they can become involved as the overall world starts developing more and starts using this technology. So in yesterday's video, besides just mispronouncing Stephen Curry's name, the overall point of the video is that there's a huge distinguishment between blockchain technology and the implementations of blockchain technology in different forms, including distributed ledger technologies, and the actual decentralized tokens that the Federal Reserve, that governments and regulators don't have direct control over, right? There's no central company or corporation where they can slap fines and regulations on for them to bend to the will of the government or the regulators. And so because of that, they're not big fans of Bitcoin specifically, and Ethereum even specifically, as we're hearing all these rumors about Ethereum potentially being classified as a security, which would not do well for Ethereum. It would likely cause a dip in the market if that was to happen because of the additional ambiguity that would happen, but also the reverse is true as well. Be that as it may, the point is that the Federal Reserve, the governments, the regulators, they are interested in the technology that they can control, not the technology that they can't control. And as a part of this, when the Bitcoin futures came out, the Federal Reserve is saying that the Bitcoin futures led to the December 2017 price decline. This is exactly what I would say large institutional organizations were hoping for, is that they could use the futures contracts in order to control or manage to some degree the price of Bitcoin. And that, from what I understand, is possible to happen at a small scale, at a controlled level scale, but there's huge risks with the Bitcoin futures contract, where if anything was to happen in the world that would cause a massive surge of interest into Bitcoin because either something negative against fiat currencies or something very positive for cryptocurrencies, then that could cause the Bitcoin price to spike up unexpectedly. And because the total supply of Bitcoin can't be controlled, it's possible for the price of Bitcoin or any particular cryptocurrency to go up very, very quickly. This ability for the price of Bitcoin to go up very quickly or even down very quickly is partially connected to the amount of liquidity in the market, and that's partially connected to the number of different places in the world where people can then buy and sell Bitcoin. And so part of the places where people can buy and sell Bitcoin is at Coinbase, like we just talked about, now the Robinhood app in Florida, as we just mentioned as well. The Bitcoin futures is a direct place that just puts direct pressure downward on the price. And even beyond that, there's going to be additional exchanges and systems that are going to try to help control the price of Bitcoin. But again, it could only control the middle cases. It can't control the extreme cases. So I don't know how true this is altogether. I definitely think this had a percentage effect on the price going down. There's also other factors like the holidays in America, the holidays in Asia, and just tax time, tax seasons for a lot of different places around the world, including the United States. There's a lot of different factors of the Bitcoin price going down from December. I think what's most interesting is that while the Federal Reserve is looking at Bitcoin as a threat, as there's a lot of other organizations, startups who want to get more involved in Bitcoin and blockchain technology, there's still a lot of ambiguity, uncertainty about what's going to happen. We've been hearing about this at every level, from major corporations to startups, from entrepreneurs to just the consumer level as well. We've been hearing this from Jamie Dimon, the CEO of JP Morgan Chase, but at the same time, JP Morgan has released PDFs and PowerPoint presentations, well, maybe not them themselves, but those have been leaked out there, which just demonstrate that JP Morgan recognizes the fundamental shift that blockchain technology is going to play. And so they're poising their organization, their bank, their financial services, everything, to be able to understand this technology and take advantage of it at every level of the system. And we also hear about this from exchanges as well: Goldman Sachs, Nasdaq, the New York Stock Exchange. And so looking at those guys, We see this article that the New York Stock Exchange isn't planning a Bitcoin futures market, but they're actually planning a proper crypto exchange, a real cryptocurrency blockchain exchange. And according to this report by the New York Times, the New York Stock Exchange, which is the world's largest stock exchange, they're planning to operate a full-blown cryptocurrency platform, completely entering the cryptocurrency market. So this is after Goldman Sachs has already reported that they're entering the Bitcoin market by launching the futures trading themselves. And also after Nasdaq revealed that their exchange is going to be opening up trading cryptocurrencies in a regulated environment. So in addition to Nasdaq and Goldman Sachs getting involved, the New York Stock Exchange is just leapfrogging over, their child's play of just dealing in futures and basic trading. And NYSE is working on an online trading platform that would allow large investors to buy and hold Bitcoin. And this is according to emails and documents viewed by people at the New York Times and 4 other people who have been briefed on the effort when they want to remain anonymous because this information is still apparently to some degree highly confidential. So yeah, Goldman Sachs, the CME, Chicago Mercantile Exchange, CBOE, other major financial institutions, all of these guys want to get involved in Bitcoin. Coinbase wants to create a custodial service, BitThumb's offline exchange. So many different organizations want to get involved, and why they want to get involved is because of the unprecedented demand that people are requesting, that people are demanding from the financial organizations which they've known their whole lives before blockchain technology and have requested, through them to be able to put their money. And so now all these customers, all these organizations that want to buy Bitcoin, if the New York Stock Exchange doesn't do it, if Nasdaq, Goldman Sachs, if these organizations don't create the service, they're going to go somewhere else, like these smaller organizations, let it be Poloniex, Bittrex, let it be Robinhood, let it be Coinbase, let it be Gemini. And that's the reason that these blockchain-based companies have now been poised to become not just billion-dollar companies, because most of them are billion-dollar companies already, but to become trillion-dollar companies, right? There's going to be handfuls of trillion-dollar companies, and the reason is going to be because of the amount of assets that they control, the amount of the network infrastructure that they control, because of the amount of tokens that these businesses are going to be holding in the process of helping, consumers, entrepreneurs, small businesses, and institutional investors get involved across the board. So popping into Wikipedia, you guys can check out the NYSE, listed as the world's largest stock exchange by market capitalization, currently holding 21.3 trillion as of June. So if you look at the top stock exchanges in the world, the NYSE listed number 1, 21 trillion. And then we have the Nasdaq number 2, also based in New York at 9.5 trillion. And after that, you have the Japanese exchange group, Shanghai Stock Exchange, so forth and so on. So number 1, NYSE, number 2, Nasdaq. And the Nasdaq, we talk about this all the time, they are part of the owners of the Nasdaq private market, which apparently had its name changed from Second Market Solutions. And this is the organization that we know and love, which has done so much awesome work with the digital currency group, with Grayscale, with creating the Bitcoin investment trust, with creating the Ethereum Classic investment trust, getting involved in a lot of really interesting projects like Zcash, like Zencash, like Decentraland. And and it's really interesting at this point just to see these major players not just say that Bitcoin is a scam and work together to rail against the consumers who are adopting Bitcoin and blockchain technology, but they're actually at a point, which is the most interesting, that these guys are fighting essentially against each other on a business level. They are positioning their own companies to prevent the other company from overtaking their market cap or from shooting up beyond them. Because if Nasdaq gets involved, if the New York Stock Exchange does nothing with blockchain technology, Nasdaq could become the number 1 stock exchange in the world, and they probably have a legitimate shot with how much investment they've been doing in this new industrial order. All right, so that's today's show. I thought that was really, really interesting. I think I recall Andreas Antonopoulos talking about this, the fact that the different banks were going to have to start making these decisions, and these different banks were going to have to start adopting the technology to protect themselves and their interests, because they can only go so long in this, new game theory-based world where people can't get involved, where people can't adopt the technology and the tools, which are simply providing, faster, cheaper, more efficient, more effective means of security and trust. So let me know, what do you think about the New York Stock Exchange creating a full-blown cryptocurrency trading platform? What do you think about all the competition between the #1 stock exchange and #2 stock exchange in the world, let alone the competition that we see happening at the same time from Goldman Sachs, JP Morgan, the CBOE, the CME, the list goes on. How soon do you think it's going to be to adoption? And what do you think this is going to mean for consumers and their ability to purchase into Bitcoin and other forms of decentralized cryptocurrency? Let me know what you think in the show notes below. Tap that like button, subscribe if you haven't already. And until next time, I'm glad that together we are minting coins.